We will be starting the webinar in 2 minutes. We will be starting the webinar in 2 minutes. Sridhar.
Yes, we can start, and I'm starting the recording also. And yes.
I welcome you all to the webinar jointly organized by Income Tax Bar Association and All India Federation of Tax Consultants. Thank you so much, Abhay bhai, for agreeing to come on such a short notice and immediately agreeing to come on the hot topic. As members are aware that the burning issue, talk of the town, and every hour some new update is coming in GST. So I think GST is now like a live score match, which changes every time when you watch the portal or when you watch the website of GST. I would like to invite President of AGFTC, CA Ravi Shah, to give his opening remarks.
I'm audible?
Yes.
Yeah. On behalf of All Gujarat Federation of Tax Consultant and Income Tax Bar Association, Ahmedabad, I welcome today's young dynamic expert advocate CA Desai sir and all the participants on today's webinar. Everybody knows the subject of the webinar is much relevant and related to respond to recent mechanical so-called notices for FY 17-18 issued by GST Department. Friends, between the webinar design and today, Department State GST has issued one more later. I think it is a positive note for us, but more what we can say material is available, and it is regarding the cases in which audit has been conducted and written scrutiny has been done, but some few aspects are still not taken care. We are with us Abhay bhai, and I'm sure that he will guide us how to file the response and how to revert back to the notices. And not taking much time, I conclude my opening remarks and wish you all happy learning. Thank you. Thank you, Asif bhai. Please carry on.
We have with us a speaker who actually does not needs any introduction, especially on the platform of Income Tax Bar Association and AGFTC, because he's like a member and a permanent faculty over here. But we will still, I would like to ask CA Ketul Soni to introduce today's speaker.
Sir, am I audible?
Yes.
Okay. Hello, everyone. It's a great honor for me to introduce today's eminent faculty advocate CA Abhay Desai sir, a legal and taxation expert with extraordinary caliber. With an impressive academic background that includes all India ranks in CA examinations and qualifications in law, his career has been marked by excellence. He is the founder of Desai Legal, a law firm specializing in indirect taxation, and has an extensive track record in representing clients before various authorities up to the Honorable Supreme Court. He has authored several books and published more than 500 articles in leading journals. He has addressed more than 500 seminars on indirect taxation till date. He has been co-opted as a member of the Indirect Tax Committee of ICI for the year 1819 and 21-22. He is a member of Indirect Tax Committee of the Chamber of Tax Consultants, Mumbai. Beyond his legal and tax expertise, he has made representation before the Honorable Finance Minister of India, as well as Deputy Finance Minister of India on various issues in indirect taxation. Today, we are privileged to have Mr. Abhay Desai sir for sharing his invaluable insight and wealth of experience with us. With this brief introduction, I welcome Mr. Abhay Desai sir. Thank you.
Sir, the floor is yours. Before we begin, we will have a 5 minutes question answer session. And if you have any questions, the member can post the questions in the chat. We will take it up after the session is over. Sir.
Yeah, okay. So good evening, everyone. First and foremost, I am grateful to the Income Tax Bar Association, Ashish Bhai, EGFTC, Ravi Bhai, Ketul Bhai, Sridhar Bhai, Vishwesh Bhai, all other senior members of both the associations, fellow professionals, and persons from trade and industry. It's a pleasure. Coming directly to the topic, certainly right now the topic is very hot in the sense that taxpayers who up till now were thinking that since they have been allotted to the state government, their life would be easier, are now realizing that that is not so. In fact, the life is becoming rather more difficult for such assesses. And that is evident. Am I audible now? Okay. So that is again evident from the fact that the way the notices have been issued, and although the organizers have aptly worded it as a mechanical notice, in fact, the department thinks otherwise. In fact, the department thinks it is a notice based on big data, because the recent instructions which they have issued, the subject indicated in that instruction is indicating that these are the notices which they find are based on big data. So we'll see how far the data is big and how far the data is relevant. So let me just share the screen first. Okay. So today what we intend to discuss is how to really respond to these notices. It is very vital for all of us to understand what kind of grounds that you must necessarily take to challenge the notices which have been issued. To my mind, and as the presentation will also show, that largely the notices are illegal. They are in large number of cases beyond limitation. They are certainly arbitrary, entirely vague in indicating the grounds on which they are proposing to make the recoveries. And time and again, courts have told us that in an adjudicatory proceedings, where the powers are given to the officers to frame the charge against the taxpayer and indicate the charges based on which the officers propose to recover the dues, and that is where the taxpayer gets the right to contest those charges, and that is how the arbitration or adjudication proceedings are supposed to be carried out. The recent notices are indicating that no such thought process has been applied at all in framing the issues, in framing the contentions which the department is seeking to base the recovery upon. And that is why I'm saying that largely, to my mind, the notices should not stand the test of judicial scrutiny in times to come. Why I'm saying this, that this is important, because this is a defense that we all must take when we respond to the notices. We'll certainly look at the situation specific response, which you also need to take to counter the allegations related to the alleged short payment of tax, alleged wrongful availment of input tax credit, so on and so forth. But before we do that, we need to understand what are all the grounds which are available with us, where we can indicate those grounds and accordingly file a suitable response. So that will be the thought process. What we intend to do is to have a more of a practical application of the legal principles that are well settled, so that you can incorporate those principles at the time of filing a response. So before I take you through the broad agenda, what we intend to discuss, this is something which I found on the net, and we are entering into the world of big data. Government also is really trying to now do the assessments based on data analysis that they gather from various sources. However, as the slide indicates, that a data which is voluminous necessarily need not be big. There should be a wisdom in the process of collection of data. There should be a wisdom in the process of shifting the data to really find out the information which is hidden within the data. And there should be a process applied to ultimately use that information within the confines of the provisions of the law. Unfortunately, the recent notices are not indicating that these steps have been performed. Whatever data that the system could lay their hands on, as I understand, the state government has procured certain software from a certain firm, and basis that software, they have run that software on the portal, and that is how the notices have been generated and notices have been issued. So no refinement of data has happened. No thought process has been applied as to how the data coincides with the provisions of the law. And that is why, as I indicated, that although the notices are basing itself on a big data, to my mind, the groundwork which was necessary for the department to undertake before issuing such kinds of notices have not been done. So that is where you find the second picture on the slide on the right, which is indicating that what happens if you go wrong in terms of collecting information based on big data. The answer is very simple, which the government is trying to adopt, is that they will stir the pile and they will start looking for the right answer. So it is like a process where they throw data at the taxpayer. Taxpayer is supposed to respond, and within the response, they are looking for some information which can prove to be vital to their entire objective of trying to recover any taxes which have not been paid or any input tax credit which has been wrongly availed. But as the presentation will also indicate, that such kind of analysis is no match for natural stupidity, and therefore, to my mind, at least what I understand now, that for even 1819, 1920, the state government is planning to adopt a similar approach. My only request to the authorities would be that instead of taking an approach which they have already taken for 17, 18, at least some more data parameters are supposed to be captured, understood, and then an algorithm is required to be designed so as to really find out any leakages. Such mass level notices erode the trust. It erodes the trust which a taxpayer has in the system. It erodes the trust which a taxpayer has when such a big reform was introduced in our country. It results into huge waste of time, resources, which are critical for everyone in this day and age. So that is why at this stage, I thought, let me start with that aspect first. Now coming to our agenda, first we will look at the specimen of the notice, because all of you who are on the webinar, who are listening to me through YouTube, would have had the opportunity of going through the notice, but for our discussion, it's always better to review it as to ultimately understand the grounds that we are going to discuss when it comes to drafting the response against the notice. Then we look at the latest instructions which have been issued just 2.5 hours back. How government has responded to the representations which have been filed by many associations, and how the government is now trying to, in a way, dilute the impact of the notices by giving reliefs to certain situations. So that is what we will discuss. Then we go to the vital aspects of how to draft a response if your case doesn't fit in the exclusions indicated in the instructions, because if your case fits in the exclusions indicated in the latest instructions, then I think there is not much to worry. In all likelihood, those notices are will be dropped, or no further adverse actions are expected in those situations. But as I understand, there are a large number of taxpayers who would not be fitting into those exceptions which are indicated in the instructions which have been issued. So for those taxpayers, necessarily they will have to deal with these notices. They cannot ignore the notices. They cannot ignore the allegations which have been indicated in the notices. So that is where the second part of our discussion becomes vital. How do you respond? So first we look at the notice from a pure legal standpoint when it comes to its determination of the validity. There are provisions of law pursuant to which the authority has been given to the officers to issue such kinds of notices. We will see various grounds where, to my mind, those provisions have not been adhered to. Therefore, it becomes important to take this as your grounds for challenging the validity of the notice. Then we look at the second aspect of the time which is available with the taxpayer to respond to the notices, the aspect of personal hearing. Then we look at the point-wise response. Largely, there are 5 broad issues which have been indicated in this system-based notices. So we look at all those 5 issues. We look at how the algorithm or the software is trying to read the annual return, how it is trying to read the monthly returns that you have filed, and basis that how the software is trying to make an allegation of non-payment of tax or wrong availment of credit. So we look at that aspect, and then we look at what kind of response one can consider. And lastly, we look at the way forward, that what do you do in situations where you have received the notices, and basis our prior discussion, what can be the strategy then that one can consider while responding to the notice. So if you see the specimen notice, I will just indicate broadly certain important factual aspects which becomes necessary while we discuss the legal aspects subsequent. So if you see, this is a summary form DRC01. If you go to the rule 142(1)(a), that rule says that the officer, when the officer is issuing a show cause notice under section 73, is also supposed to issue a summary of that notice in form DRC01 electronically. So it is there that form DRC01 finds the reference. So it is a summary of the show cause notice. It is not the show cause notice. A show cause notice will be either an attachment with this form, or it will be separately issued to the concerned taxpayer. It is DRC01 only summarizes the key liability or quantifies the liability which the department is seeking to recover from the concerned taxpayer. So if you see this form, it is electronically issued. The date of this issue as indicated in this particular case is 28th September. In many cases, it has come on 30th September. It has the GSTIN, the name and the address of the concerned taxpayer. It has the period. Since we are talking about the recent flow of notices, all of that relates to 17-18. That is the first year of the GST implementations. Hence, the period is from July 17 to March 18. Then it refers to certain provisions of Act and the rules. You will find shockingly that it refers to section 61 and it refers to rule 99. So I mean, we will see later on how what this has to do with the kind of proceedings that the department is intending to undertake. Then it refers to section 73. All the notices have been issued under 73. 73 basically grants power to the officer to issue notices to recover any dues which have not been paid or any credit which has been wrongly availed for reasons other than fraud and evasion. So this is basically a provision dealing with normal period of limitation where the power is given to the officer to issue the notice for recovering the allegedly non-paid or short-paid dues. Then it talks about the summary. Now, before I take you through that, it's important to understand why 73. 73 is relevant because these notices are entirely based on the reportings which have already been done by the taxpayers, either by way of filing the monthly returns or by filing the annual return. Therefore, this information is already available with the department right from day one, whenever these relevant forms were filed. So it is not a case where this information was suppressed. It is not a case where this information was willfully withheld. It is not a case where this information was fraudulently not furnished. Since the basis of the notice is the information which taxpayer has himself submitted to the department, therefore the department has rightly understood that a notice based on information already available with them based on the filings done by the taxpayer cannot fall within the purview of 74, which is a provision dealing with cases involving fraud and evasion. And therefore, to my mind, as far as this aspect is concerned, department has rightly invoked 73. If department had invoked 74, then certain they would have got extended period of limitation, but then those notices would not have survived to the extent of the extended period of limitation beyond the normal period of limitation. So that is why you will find a reference of 73 in this form. Then as far as the facts of the case are concerned, the notices are indicating that you refer to the attached sheet. For grounds also, there is a reference of the attached sheet. Then there is a table formulated to quantify the liability, the SGST and the CGST liability. IGST coincidentally has been missed. It appears that the state is more interested in only working for themselves than for the center. So the entire focus of this notice is only on these two taxes, CGST, SGST. Then it refers to the attached document. Then it refers to the date by which a taxpayer is supposed to give the reply. In this case, the reply is to be given by 28th October. Then in the column, in reference to the personal hearing, the time of personal hearing and the place where the hearing is supposed to happen, all the three columns are blank. No date or time or place has been indicated in the notice. When you look at signature, you will find the name of the officer, the designation, and the jurisdiction. What is glaringly missing is the digital signature of the officer who is supposed to be vested with the power to issue such notices. Keep all these aspects in mind because all of these aspects will become relevant when we deal with the grounds to challenge the given notice. Now let us see the attachment along with this notice. What does it indicate? So this is a common format which the state government has used when it comes to indicating the grounds on the basis of which they intend to recover the dues. So there also you will find a reference to 1718. You will find that the basic data for initiating this proceeding has been compiled from the returns which have been filed as well as the e-way bill records which are available. So this becomes the basis for the purpose of making the allegations. Based on this scrutiny of this information, the allegation is framed to say that these are the SGST and CGST dues which are to be recovered from the concerned taxpayer. Then the attachment goes further to give details about how those dues have been ultimately considered. So it broadly divides the liability into two parts. Number one deals with output tax. As you can see on your screen, it tries to compare the output tax declared in your annual return with the tax actually paid, and then comes out and says that if there is balance which is still payable, then that is considered as part of the liability which the department is intending to recover. We'll have a detailed look at this aspect again when we look at the point-wise response that one can consider. Second broad area on the basis of which the liability is alleged to be recovered deals with ITC. In case of input tax credit, the opening part of this entire formulation refers to 16.2c only. However, as we will see, 16.2c has been also again referred later as a subpart of this calculation, where it tries to recover the ITC in respect of suppliers whose registrations have been cancelled, or suppliers who have either not paid the tax or not declared their liability. So this particular area has multiple tables. First table deals with the difference between the ITC availed in 3B with the ITC which has been reflected in table 8A of annual return. Table 8A of annual return essentially captures the information based on GSTR 2A file available at the relevant point in time. So basis that information, the notice seeks to compare that input tax credit with the input tax credit which has been indicated in 3B, and if there is any adverse difference, then the notice is alleging that that adverse difference is required to be recovered. Then the second aspect which the notice deals with pertaining to ITC is with exempt supplies. It basically again picks up figures from annual returns, and it says that since you have made certain exempt supplies, the ITC is required to be reversed. So it makes a calculation based on the proportion of exempt supplies to total supplies, and basis which it applies that percentage to the entire ITC that you have availed during this particular period, and that is how it arrives at the amount of ITC which is required to be reversed. It compares that figure with the ITC already reversed and indicated in either the annual return or GSTR 3B. It takes the higher of the two figures, and that is how it basically takes us to the difference. And if there is an adverse difference in terms where the ITC to be reversed is higher than the ITC already reversed, then in that situation, the notice alleges that this excess amount is required to be recovered. Third aspect related to ITC which the notice touches upon is pertaining to provisions related to section 17.5. Now section 17.5 of the CGST Act, as many would be aware, deals with provisions related to block credits. There are certain set of supplies indicated in this provision in respect of which the input tax credit is not eligible. The notice therefore, based on the filings done by your suppliers in terms of their GSTR 1, their e-way bill records, finds out certain HSN codes where the notice alleges that the input tax credit is blocked under section 17.5, and therefore it culls out this information, and then it compares the ITC ineligible which has been declared in the annual return or 3B, whichever is higher, and to the extent of short declared ineligible ITC, the notice is proposing to recover that amount. The last aspect dealing with ITC that notice touches upon is ITC related to three categories of suppliers, where the notice is trying to base itself on section 16.2 clause C to say that tax has not been paid by the concerned suppliers, and therefore the notice is trying to allege that the ITC indicated in this table is not eligible, and therefore is trying to again recover this credits. Which are those three suppliers that notice is trying to consider? First are suppliers whose registrations have been cancelled before the date of issue of invoice. Second are suppliers who have failed to file their 3B and have not paid the tax on the invoices which they have declared in their GSTR1. And third are the suppliers who have filed 3B with nil turnover and has not declared or paid the tax corresponding to the invoices declared in their GSTR1. It summarizes the ITC which notice thinks that the taxpayer has availed, and therefore the summation of this amount is also again sought to be recovered. And then it summarizes the total of allegations pertaining to short payment of output tax, pertaining to the excess claim of ITC, and this is the amount that the notice is proposing to recover. You will find here again in all these tables there is no column of IGST. So IGST is completely ignored. The notices are only focusing on SGST and CGST. So if IGST has been availed on the invoice issued by suppliers who have not paid the tax or who have or whose registrations have been cancelled with the date prior to the date of issuance of invoice, then in that situation the notice as we speak does not find any grievance or any dispute on that aspect. The notice ends by saying that the officer is proposing to assess this particular taxpayer with the liability which has been indicated in this table, and therefore the notice again is suggesting the taxpayer to either pay the tax along with interest at 18% and applicable penalty. In fact, under 73, if you pay any tax within 30 days of the notice, then there is no penalty which is applicable. However, the notice reproduces verbatim what generally they mention in notices which they issue under 74. And then it says that if the taxpayer is not agreeing with the proposals, then taxpayer is supposed to file the reply in form DRC 03 within 30 days from the date of receipt of this notice. And that is how the notice ends. Here also you will find that notice has not been signed. It has not been signed either by digital signature or even physically, manually. And therefore, this is how the notices have been issued. So this clearly indicates all are system-based notices. There is no role of officers in issuing such notices. It is system who has decided what is to be recovered from which taxpayer, and that is how en masse these notices have been issued. And now the proper officers are given the role of adjudicating this system-driven notices. In fact, officers would not be even aware as we speak about the notices which the system has issued to the taxpayers falling within the jurisdiction of that particular officer. Now, with this in mind, let us see the latest instructions which have come. These are again something which is important. Certain cases would certainly fall within the parameters of these instructions, and therefore, hopefully, the matters should conclude for such taxpayers. So let us look at the instructions. Of course, these are the instructions which are issued for the departmental officers to follow. These are not the instructions which in a way has a statutory backing, but since they have been issued by the higher authorities, certainly the officers cannot take a stand contrary to these instructions. So again, these instructions has been issued to all the joint commissioners across the state from all the divisions, that is from division 1 to division 12. So entire Gujarat state is covered by this particular set of instructions. Instructions have been given by the additional commissioner. Now, instruction is referring to again the big data, what we already discussed, that these are the notices which have been issued based on that big data analysis. And then the instruction is trying to indicate certain situations where the officers are directed to conclude the matter. So which are those instructions? There are 9 separate situations which have been indicated in the notice in this instruction. So let us see one by one. First is in a situation where audits have already been initiated for the taxpayer. In that situation, the instructions are saying that the notices are required to be dropped. So it is not just a situation where the audit has concluded. Even a case where, let us say, a taxpayer has received the notice for purpose of conducting audit for 17-18. In that situation, on that very fact that already the taxpayer has been issued the notice in ADT 01 for the purpose of initiating the audit under section 65, in that situation, the instructions are indicating that this notice is to be dropped. The reason is very clear, that it is based on the findings of the audit that further proceedings, if required, would be taken up by the concerned officers. Second situation where the instructions are saying that the notices are to be dropped are the situations where written scrutiny has happened earlier by way of issuing notices in form ASMT 10, and those written scrutiny have been concluded. In that situation, the instructions are saying that to the extent of the issue covered by those proceedings, the present notices are required to be dropped. So as we have seen in the specimen, on the outward side, there is one issue, basis the comparison of tax payable versus tax actually paid. On the ITC front, there are 5 issues which have been indicated in this notice. So let us say if a taxpayer has already received notice on any of these 6 issues, either one on the outward side or any of the 5 on the ITC side. In that situation, the instructions are saying that no further proceedings qua this particular notice would be taken up against the issue on which already a notice has been issued. So it is not a complete exclusion which is available for the taxpayer. The exclusion would be limited only to the extent of the issue already forming part of the earlier proceedings in terms of scrutiny of the return. So in such situation, perhaps the officers will have to ultimately, before calling for hearing, they will have to ultimately find out whether in the past a notice based on return scrutiny has been issued to the taxpayer for this particular year. What was the issue on the basis of which that notice was issued? Whether that basically and whether that issue forms part of this 6 issues that are now indicated in the current present notice. If there is a common issue, then in that situation, the current notice to the extent of that issue would be ultimately dropped. The remaining issues would still survive, and therefore the taxpayer will be expected to file a response against those remaining pending issues. Third situation is in a situation where already the taxpayers have received advisory or summons. So these are largely cases where the department alleges that your credits are bogus, that you have availed credit on bogus invoices, on fake invoices. So in the past, several advisory summons have been issued to many taxpayers trying to suggest that either they reverse such credits or file a response as to why their claim should be upheld. So these are all the proceedings which are somewhere going on at some stages. So again, the instructions indicate that in that situation, to the extent of that issue, the present notice would be dropped. So here, as we have seen, one of the issue out of the 5 issues related to ITC deals with the issue where they intend to recover the ITC based on either the registrations of the suppliers have been cancelled or where they have failed to pay the taxes. So these are situations where perhaps already the taxpayer would have received some advisory or some summons, and therefore to that extent the proceedings under the present notice would not continue, it would be dropped. These are the earlier proceedings which would ultimately be taken to the logical end. The fourth situation deals with a case where enforcement action has already happened for 17-18, and in the context of enforcement action, the documents have been basically seized. The proceedings are going on. Again, in all those situations, the instructions are indicating that in such situation, the actions are to be taken under section 74, and therefore they are indicating that the present notice issued under section 73 is required to be dropped. Fifth situation that they are indicating is a case where already a taxpayer has filed DRC 03, DRC 07. In that situation, again, they are saying that notices are required to be dropped. So these are situations where, let us say, a taxpayer has already remitted the dues which are now indicated in the present notice. Taxpayer might have remitted the dues along with interest. In those situations, again, the instructions are saying that the present notice is required to be dropped. Sixth situation is covering cases where, let us say, the issues involved relate to fake credits. Again, in such situation, the instructions are saying that in such situation, the penal consequences under section 122 are to be undertaken. And therefore, in such situation, the present notices based on this data analysis is required to be dropped. Seventh situation they are considering relates to the provisions under section 17(5), where as we have seen, the notices have gone based on the HSN, and basis HSN they are alleging that the credits are not admissible. But there are situations where, let us say, there is a dealer of motor vehicle. Certainly credits are available to such dealer who is ultimately purchasing the vehicles for further supply. There are dealers of cement where certainly credits are available for further supply of cement. There are builders, developers who are again taking credits in respect of cement and steel, but again, credits are eligible if they are providing further works contract services. So these are all the exceptions which are inbuilt in section 17(5) itself. And therefore, the instructions are saying that in such situation, if the officer bases the scrutiny of the returns, finds that the taxpayer is covered by these exceptions, because it is the business of the taxpayer to deal with motor vehicles. It is a business of the taxpayer to deal with cement as a trader. It is a business of the taxpayer to provide works contract services. And then in that situation, the instructions are indicating that the present notices would then be dropped. The notices are also making it very clear that the taxpayers should not be harassed, and as much as possible, the analysis has to happen by the officers at their end itself. And basis analysis, if they find that the concerned taxpayer is covered by this situation, then the notices are to be dropped, and that fact is to be indicated to the taxpayer. Eighth situation deals with cases where there is a exempt supply present in the annual return which has been filed by the taxpayer. The instructions are indicating that in that situation, they will look at exempt purchase. If they find that there are exempt purchases which correlate to the exempt supplies that they have made, then in that situation, they are indicating that then no further reversal of ITC is required as per rule 42 and 43, and therefore they are indicating that in that situation again the notices are required to be dropped. And then as the last point, they are indicating that in situation where the notices are to be dropped, that information is to be given, and in a situation where proceedings are to be initiated, then in that situation reasonable opportunity should be given to the taxpayer to make a defense submission, and accordingly the proceedings are to be taken up. So this is in sum and substance what the latest instructions which have been issued today afternoon indicate. To my mind, this certainly does not solve all the problems. These instructions again are something which to my mind to some extent are vague. As an example, I would indicate that, let us say, if someone has already paid DRC 03 in the past, but he may not have paid interest, or he may have paid interest based on a working that he feels is in accordance with the law. He may not have paid any penalty, and today the department may indicate that since you have not discharged the applicable interest as per the allegations indicated in the notice, or since you have not discharged penalty, in that situation perhaps the officer may still continue with the adjudication of the notices. They may not drop the notices. Again, when it comes to 17(5), again there are a lot of situations where credits are eligible. As an example, let us say you are purchasing cement and you are using that cement to make foundation for plant and machinery. Law creates an exception under 17(5) clause C and D, and it says that credit in such situation is duly admissible. Again, this is the fact which has not been considered while issuing the notices. Notices have only gone based on the nature of supply. They have not considered the usage of the supply. So, except evident cases where it is clearly available that they fall under that exception based on the usage of that inward supply, all other taxpayers will still be compelled to ultimately file a response, give evidence, and justify the claim of ITC. Again, when it comes to Rule 42 and 43, the instructions indicate that if they find the exempt purchases, then in that situation, they are saying that you drop the notices, but the law is not formulated in that manner. Even if you are having exempt inward supplies, still there is a possibility of having common credits which may require reversal under Rule 42 and 43. So there is no clarity as to, in that situation, whether the officers will still drop the notices or they will try and still expect a response indicating the common credits out of the total credits which has been availed, and then determine the actual amount which is liable for recovery. So largely these instructions take care of situations where already audits have happened, already written scrutiny has happened on those issues which are again duplicated in this notice, cases where enforcement actions have already happened. So largely those would be the bigger beneficiaries of these instructions. All other taxpayers who are not falling within these exceptions that we have just discussed would be required to file a proper response to the given notices, basis which the adjudication will happen and eventually the fate of the notices would be decided. So largely, as you can find, now the State Department is trying to dilute the impact of the notice. In fact, the notices, as we will see now, has been issued on completely wrong footing. Now the impact of that notices is now sought to be diluted by giving these exceptions, hopefully for 18, 19, 19, 20, as I indicated earlier. Much more analysis is also undertaken by the officers before issuing such en masse notices. Otherwise, for those years also, we will end up with the same set of problems, same set of issues. So now, having dealt with these two topics, now let us look at the third important aspect for which you have all gathered today on the virtual platform. How do you respond to this notice? Because now, let us say your case does not fall in the exceptions which you have just discussed in the instructions which have been issued. So that means that you will have to respond to the notice. So that brings us to this important aspect of how do you respond. Now, when you draft a response, you need to also first understand that whether the current notices are valid, because if they are invalid, then that should become a vital aspect of your response. And then you deal with specific fact-based allegations which are formulated against you. So that is how we will also understand this aspect. First, we'll understand the aspect basis the validity, and then we go to the fact-based response that one can consider. Now, when we deal with validity, there are serious infractions of law that has happened by the manner in which the notices have been issued. So let us first deal with those infractions one by one. Now 73(1), this is the provision pursuant to which the notices have been issued. Now a very careful reading of this provision will clearly indicate that these provisions are giving the power to the proper officer where it appears to the said officer. So it should be an assessment of an officer, not a system. And basis the assessment of that officer, if the officer finds that tax has not been paid, or it has been short paid, or input tax credit has been wrongly availed or utilized, it is at this point in time that if the officer satisfies this test, it is then that the officer is vested with the power to serve the notice on the person which the officer thinks is chargeable with this particular tax. And that is how the proceedings are supposed to happen. 73(9) talks about that once the officer exercises the power available under subsection 1, then a representation which is filed by the taxpayer is required to be considered. And after that, the officer will have to make an assessment by passing an adjudication order. 75(6) and 7 talks about the manner in which the officer is supposed to perform the duty. 75(6) says that the officer in the order will have to set out all the relevant facts and the basis of the decision. And more importantly, 75(7) says that the demand in the order shall not be in excess or shall not be confirmed on the grounds other than the grounds specified in the notice. Now, what does this entail? This set of provisions which you are able to see on the screen entails that the officer has to clearly indicate the grounds in the notice. And it is on those very grounds that the adjudication has to happen as to whether the proposed demands based on those grounds are tenable. Now, time and again, courts have told that the grounds cannot be vague. The grounds have to be specific. The grounds have to be based on the cogent material available with the officer. The grounds have to be based on the specific provisions of law which the officer finds that the taxpayer is alleged to have violated. If the notices are vague, if they are unintelligent, if they are lacking any detail, then the courts are saying, including our highest court, that those notices are invalid. Now, why so? The reason is very simple, that unless you tell the taxpayer what he has actually violated in terms of provisions of law, it is only at that stage that the foundation of the notice becomes valid, and it is only at that stage that then the taxpayer is required to file a specific response to that allegation. Now, as we have seen the specimen notice on all the 6 issues that you find, to my mind, the allegations are completely vague. They are completely unintelligent. Let us go one by one. First issue, short payment of tax. What is the notice comparing? The liability declared in the annual return with the liability paid as auto-drafted from GSTR 3B. Now, law on the other hand does not prevent the taxpayer from discharging the liability at a later point in time. The law does not contemplate that the taxpayer is required to discharge the entire liability within the same year in which the transactions have happened or the supplies have happened, and indicate all of those payments in the annual return that the taxpayer is filing. In fact, the form of annual return does not have that specific field where the taxpayer can include the data related to the payment which the taxpayer has done at a subsequent point in time. So without appreciating this foundational information, which is very vital before making an allegation against someone alleging that he has not paid the tax, has been completely ignored in the notice. Now come to the ITC side. On ITC side, again, on all the 5 points, the notices are completely vague. First point, they are taking data as per 8A, table 8A of the GSTR 9. Now, table 8A of GSTR 9, the annual return, is based on the GSTR 2A, which was available at the given point in time when the annual returns were expected to be filed. In fact, time and again, the government, including the board, CBIC, have been telling us that 8A, or for that matter 2A, is only a statistical information for the period that we are discussing, 17-18, and a taxpayer is expected to avail ITC basis on the provisions of the law. So when on one hand clearly 8A or 2A cannot become a foundation, it may be a start to an inquiry, but it cannot become a foundation to allege that the credits are ineligible or credits are not admissible. So again, here the notices are vague because they are making the data which could have been a basis for further inquiry as the very foundation to allege the wrong availment of credit. Look at other cases. They are looking at 17(5) by applying that restriction based on the HSN. So if my supplier declares an HSN that he has supplied the product, which is cement, he has supplied the product, he has supplied a works contract service falling under the SSE 9954, he has supplied motor vehicle without verifying as to whether A, have I availed the credit in the return that I have filed? B, if I've availed the credit, why I am not falling within the exceptions which are indicated under that very provisions under section 17.5. So without examining these two foundational information about availment of credit or the usage of the supply in question, the notices have completely gone on the very footing that since your supply are falling within the HSN, which the notice thinks are inward supplies where the credit is blocked or completely restricted, is something which is completely vague, completely unintelligent. Let us look at other aspect. The notice is trying to consider the fact that the registrations of certain suppliers have been cancelled. Certain suppliers have filed the returns, but there is a discrepancy where their liability does not tally with their the payment of tax does not tally with the liability declared in their GSTR1. Notices are going on the footing that there are suppliers who have filed the returns, so not paid the tax. It is shocking to consider that in this third set of situation, they are in fact considering all transporters, where there is a evident provision of law that during that particular year, where the transporters have clearly declared in their return that tax is to be paid under reverse charge by the recipient. In that situation, where is the question of comparing the payment of tax by the transporter and then to allege that since the transporter has not paid the tax, your ITC, your claim of input tax credit is ineligible, completely vague, completely baseless, completely unintelligent. So as this indicates, this is the exercise which could have become or could have been a starting point for initiating audits, starting point for initiating return scrutiny, starting point for initiating such kind of proceedings. Such data can never become a base for alleging or making a serious allegation against a taxpayer in terms of saying that you have not paid the tax or you have wrongly availed the credit. So to my mind, by issuing these notices, they have reduced the stature of 73(1) by making those provisions as if they are in the nature of power given to initiate any inquiry and not the power to make an allegation which is serious against the particular taxpayer. This goes completely against the settled provisions of law, completely against what Supreme Court has been telling from time and again. So therefore, to my mind, this is something which everyone must contest and must indicate in the response that the notices are completely vague, completely unintelligent, and therefore those notices deserve to be quashed. Let us look at the limitation aspect. Again, very interesting issue is here involved. Now, 73(2) says that an officer is supposed to issue the notice at least 3 months prior to the time limit specified under subsection 10 for the issuance of order. So provision has been formulated in terms of limitation to say that the notices are required to be issued at least 3 months prior to the time limit specified for the issuance of an order. Now, under subsection 10, what is the time limit within which the order is required to be issued? The provision says that the order is supposed to be issued within 3 years from the due date of furnishing of the annual return. Now, already for 17-18, this time period has already elapsed. Now, to get over that aspect, what has happened? There is a new provision which has been brought under the statute by way of section 168 capital A, which was inserted on account of COVID-19 pandemic, whereby the department could not undertake their activities, and therefore in that context to basically permit the department additional time to basically complete the activities. It is in that context that 168 capital A was inserted by the Taxation and Other Laws Act of 2020, and it is by virtue of exercise of the powers under this provision that a notification has been issued extending the time limits for the purpose of issuing the orders under section 7310. So if you see for 1718, the extended time limit is 31st December 2023. So it is by virtue of this provision that the department is trying to say that the notices that they have issued are within time, because the due date is 31st December 23. They are supposed, for passing the order, they are supposed to issue the notice at least 3 months prior to this date. So that is how they are considering 30th September 2023 as a cutoff for 1718. And that is how all taxpayers have received these notices around 30th or 1 or 2 days prior to 30th September 2023 on their GSTN portal. Now, what is the issue here? Issue is like this, that if you look at section 168 capital A power to extend the time limit was not unconditional. The power to extend the time limit was with the belief that the actions which the department was supposed to complete or comply could not happen because of force majeure event, that is COVID-19 in this particular situation. Now, we are sitting with the notices which are completely computer driven, completely system driven. Now, whether this action which has happened now by just putting a certain software in the department's at the department's end, culling out this data, basing their allegations based on this data, and now alleging that the department intends to recover this amount. Can we say that this was the action which they could not complete because of COVID-19? Where is the action here involved? Where is the manual action involved of officer issuing a letter, issuing a notice for scrutinizing the return, finding the facts based on the response given by the taxpayer, then coming to the conclusion after appreciating those evidence that still there is something which is required to be recovered, and then applying the mind and issuing the notice. Had this activity happened, then we could have understood that since because of COVID, this activity could not happen within the normal period of limitation under section 7310. It is on that ground that the department is right in claiming this extended time limits for the purpose of completing those activities. A completely algorithm-based, a system-based notice without intervention of officer, without even signature of the officer. How can those notices be said that those work could not be completed because of COVID-19, and therefore the department can buy additional time and say that the notices have been issued within the period of limitation? Again, a serious challenge will be posed here on this ground also. So again, something you must consider while drafting the defense reply, that for such kind of notices, extended period could not have been invoked. 168 capital does not give the liberty. The parliament does not give the liberty to conduct such system-based initiation of notices by virtue of section 168 capital A, and therefore something again which one has to consider as a defense challenging the aspect of limitation. Another important aspect, this is again something very important, something where I think department has not appreciated, largely even the trade has also not appreciated. See, many notices have been issued on 30th September 2023. Even if you find departments flyer, or if you see departments literature, they will say that cutoff is 30th September 2023. This is 3 months prior, and therefore the notice issued on 30th September 23 is valid. Is it really so? To my mind, not. See, if you see the provisions of law 7310, they have just extended the date for issuance of order to 31st December. Now, when we apply 73.2 to this new cutoff date of 31st December, how the law will apply? The law says that the notice is required to be issued at least 3 months prior to the limit specified under subsection 10. So we can read this now in our context to say that notice should have been issued at least 3 months prior to 31st December 2023. Now, how do you interpret this word at least 3 months prior to? Now, the word month, first we have to consider, the month has not been defined in the GST Act. The month has been defined under the General Clauses Act. And this is the definition that has been followed and applied in all the statutes which we are dealing with, including the GST law. How the month has been defined? The month has been defined to mean the British calendar month. What do you mean by the term British calendar month? It means that you ignore days, you just jump the sequence in terms of months. So when you look at 31st December 23 as a cutoff date, and when you look at 3 months, it would mean 1 month would end on 30th November, another month would end on 31st October, and the third month would end on 30th September. So that is how the 3-month period is to be considered. So you don't consider actual days in terms of 90 days, you jump the date by way of just changing the months. And if in that month, if 31st is not there, then you go to a date prior to that date. In our case, since there is no 31st in September, so we jump 1 date prior and we arrive at 30th September. So that is month. So 3 months would be ending on 30th September. But the law does not say that the notice can be issued at the end of that 3-month period. The law says notice must be issued at least 3 months prior to. Now that word at least and prior to are very important. Now, how do you read this word prior to? Section 9 of the General Clauses Act has a solution for it. It says that whenever a statute uses the word to, it would mean that even the last day would be included within that computation. So now again, we go back to that 73.2. What it says, at least 3 months prior to. So clear 3 months period is required to be given before the date of issuing the notice and issuance of order. So prior to would include 30th of September. So a notice will have to be issued prior to that date, because 30th September falls within the period of 3 months, because as we discussed, 3 months prior to would include the last date of limitation, which is 30th September in our case. And law says notice have to be issued at least 3 months prior to this date. So prior to 30th September is the date by which the limitation would apply, and that is the date, that is 29th of September, by which the law requires the officers to issue the notice. One can also refer to this case of Madhya Pradesh High Court in case of Jayanti Mishra, where the issue was exactly similar to what we were discussing, where in the context of a certain law, there was a mandate that the application is required to be filed at least 30 days in advance. The court interpreted this provision relying on the definition of the General Clauses Act, relying on certain English cases to say that whenever a law uses the word at least, it means that clear gap of whatever duration which is indicated after these two words is required to be there, and therefore the act is required to be done prior to this entire clear duration which is to be given to that particular person. So if we apply this law to our provisions under 73.2, then a view clearly appears that the cutoff date for issuing the notice for 17-18 would end on 29th of September 23 and not 30th September 23, as is understood by the department for cases where they have issued the notices on 30th September 23. So again, if you happen to be dealing with notices which are issued on 30th September 23, certainly take this as a defense to say that the notices are time bound. The notice have not been issued within the limitation given under 73 subsection 2, and therefore on that ground the notices are required to be vacated. Now let us look at another dimension to this aspect. What section 61 says? 61 says that it gives a power to the officer to scrutinize the return. And basis the scrutiny, if the officer finds certain discrepancies, then he has a power to seek an explanation. And if he is not satisfied with that explanation, then he has a power to initiate proceeding either in terms of audit or in terms of issuing show cause notice under 73 or 74. Now, on one hand, 73 is independent. As we saw, 73 does not say that prior to issuance of notice, a proceeding under section 61 should have been undertaken. However, when you look at the intent behind 61, intent is very evident from the fact that the parliament intended that when it comes to scrutinizing of the returns and undertaking inquiry based on the discrepancies found during the scrutiny, there is a separate mechanism given under section 61 with the additional power given to issue a notice under section 73 if they find that the amount after undertaking such scrutiny is required to be recovered. This is a conscious intent of the parliament to say, because they understand that immediately on scrutiny of return, they cannot jump to an allegation under 73 and make a serious case against the taxpayer. So that is why this intervening step has been created in terms of section 61 to say that first, for all other matters, you can directly jump to 73. If they conduct an audit, if they find any discrepancy, they can very well jump to 73 because during the audit, opportunity would have been given to the taxpayer to respond to the discrepancies which they might have observed. During search, opportunity might have been given while recording the statement, while giving submissions post the search. So when it comes to return scrutiny and finding discrepancies and making an allegation basis those discrepancies, to my mind, although 73 does not specifically say that 61 should have been invoked prior to issuing notice under 73, to my mind, given the way the law has been formulated and the way 61 is a step created prior to exercise of a right of a serious nature, to my mind, a harmonious interpretation is required, and therefore, to that extent, I would say that again, if a case has happened where ASMT 10, no scrutiny has happened, and immediately basis this data, the department has made this serious allegation, that certainly this becomes a ground to say that without conducting proceedings under 61, no direct proceedings can be undertaken under 73. We have a decision of Madras High Court which supports this view in the case of Vadivel Priotech, where Madras High Court has held that since there is a mechanism for written scrutiny, and if the allegations are based on written scrutiny, then certainly first section 61 has to be exercised, and basis the response, further proceedings are required to be conducted. Straight away issuing notice in DRC 01 is not valid. So this is again a contention that one has to take while framing a response. Closed proceeding, this was an issue, but now as we have seen the instructions which have been issued today, this to my mind is now no longer an issue. These are again proceedings where already notices have been issued, audits have been conducted, search cases, instructions are now categorically saying that in those situations, as far as common issues are concerned, to the extent of those issues, the present notices would be dropped. So now this does not require any further elaboration. Concurrent proceeding. This also can be an issue in many cases. You might have found that already the cases are going on with the other wing of the government, with the central wing. In that situation, the law is very clear that once a subject matter is seized by one department, where the jurisdiction is seized by one department, the other department cannot seize the jurisdiction, even if taxpayer is allotted to that department. And it is only the first department who has to then ultimately take the proceeding to its logical end. So again, something which one must consider if already you are facing a situation where already a central department has already initiated proceeding on a matter which you find as part of this current notice, then certainly this has to be indicated that by virtue of section 6(2) clause B, no proceedings can be initiated by the state against that particular subject matter. Center state issue is also there. These notices have in fact been issued only to the assesses which are with the state. So largely this should not be a ground, but we have come across one situation where an assessee is with the center and still the notices have been issued by the state. So in that situation, certainly this ground has to be taken that once a taxpayer has been divided, except enforcement based action, there cannot be a concurrent exercise of jurisdiction, and therefore to that extent the notices are lacking the jurisdiction in terms of initiating the proceedings against a taxpayer who has been assigned to the center. issuance of notice, the law says that notices are to be issued at least 3 months prior to the limit for issuing the order. Now, section 169(1) has various modes of issuing notices. One of the mode is necessarily making the notice available on the common portal. However, technical challenges are still not ruled out. There are still many taxpayers who are facing difficulties in accessing the portal. There are many taxpayers who are facing difficulties where department might have uploaded the notices, but those notices are not yet visible to the concerned taxpayers. So in all those situations, the courts are telling that in that situation, although the law permits the department to issue the notice electronically on the portal, still the courts are saying that in that situation, the department must make sure that the notice has been auto-populated correctly and the taxpayer is in a position to access that notice. If the department is not able to demonstrate that the notice has been auto-populated correctly and the taxpayer is in a position to view those notice, and the taxpayer is able to demonstrate that they are facing technical issues while accessing the notice and therefore they could not respond and therefore some adverse order comes to be passed. In that situation, certainly the defense has to be taken that no valid issuance has happened. A valid issuance can happen only now when, after indicating these technical issues, if the department gives you a manual copy, the date of issue would be that of today, and therefore the notice would get time barred. And therefore, in that situation, if that is the situation, if you are facing, then you should certainly take that again as a defense to say that now no further proceedings can be undertaken against such time barred notice. Authentication. Now, this is very much important. See, if you look at the notice, both the summary of the notice in DRC 01 as well as the attachment, the so-called detailed notice that we saw, nowhere there is signature of the officer. There is no digital signature. There is no manual signature. So these are the notices issued without signature. Can this be considered as a valid notice at all? If you see Rule 26, Sub-Rule 3, it specifically mandates that an officer issuing a notice, this is provision specifically for officer, not for the taxpayer. It says that an officer issuing the notice electronically will have to authenticate that notice by way of a digital signature or an e-signature under the provisions of the Information Technology Act, or it has to be verified in the mode which is permissible by the board. To my mind, all the notices which have been issued do not have signatures, do not have digital signatures. So they are clearly in violation of this provision of law that we are discussing. Courts are saying time and again, you will find a reference of certain decisions of Delhi High Court. There is a decision of Madras High Court where the courts are saying that notices, orders without signature are invalid. Those are not valid documents issued in the eyes of law. And therefore, they are quashing such orders, they are quashing such notices. This is again, to my mind, a very serious lapse. If, let us say, on the other hand, if the taxpayer would have given something without signature, in the past we know situations where those submissions have been completely ignored on those very grounds that those submissions are not properly authenticated. Now, in such situation, it cannot be a case where a larger right is extended to the officers in terms of saying that even notices issued without signatures can still be considered to be a valid notice. So again, a very strong point that you must consider as your defense to say that the notices are not valid because they do not have signatures at all, and notices without signature, courts are saying, the provisions of law is also saying, are not valid notices. Now, if you see the notice, in all the notices that we have come across, the opportunity of personal hearing is not granted. The mode, the venue where a person is supposed to appear is not indicated. The date when the person is supposed to appear is not indicated. The time when the person is supposed to appear is not indicated. Now, that is a defect in the notice. Now, that defect, whether it's a curable defect, only time will tell as to what further actions the department would take to cure this defect. But at present point in time, it is a serious defect, again, adversely affecting the right of the taxpayer. 75 subsection 4 clearly indicates that wherever an adverse decision is contemplated, an opportunity has to be granted of hearing. It is not that only when a taxpayer makes a request that the opportunity is to be granted. The law is very categorically saying that even without request, wherever an adverse decision is contemplated, a taxpayer has to be given an opportunity of hearing. A notice issued without giving that opportunity becomes an invalid notice, which cannot sustain in the eyes of law. So again, something that you must take as a defense to say that since the notices are not giving you that opportunity of hearing, again, these are notices which would not be considered to be valid in law. Now, let me take you through this section 160 because department may take shelter under this provision to say that notices are valid, but that is not so. If you see section 160 subsection 1 talks about doctrine of substantial compliance. It says that if the notice substantially and in effect complies with the provisions of the law, not just intent, purpose, and the requirement, then in that situation only the adjudication that happens vis-a-vis that notice can be held to be valid and it will not be deemed to be invalid. Now, whatever defects that we have pointed or what we have discussed are substantial defects. These are not merely clerical defects that we are discussing. These are the defects which are going to the root of the principles of natural justice. And therefore, to my mind, section 160 subsection 1 cannot rescue the case by saying that all the defects which we have indicated where notices are vague, notices are without signature, notices are unintelligent, notices are beyond limitation, notices have not been properly issued, all those defects are substantial defects. All those defects are evidently contrary to the express provisions of law. So those defects cannot be said to be a clerical defect so as to justify the adjudication that takes place pursuant to such notices. So again, something one must consider and address it in the defense submission. Why I took half an hour to discuss all these aspects? Because of subsection 2. Subsection 2 says that if the service of notice is not called in question at the earliest available time, then it creates a fiction to say that in that situation, it cannot be called in question at a subsequent point in time. If you are acting upon this notice without challenging the service, then in that situation, the law presumes that you have given up the right to challenge the service of the notice, and therefore, at a later stage, you cannot exercise that right. That is why I took you through this half an hour to say that kindly exercise this right. You certainly should give the submission on merits on the 6 issues that are indicated. However, the validity should also be equally challenged so that it clearly comes on record that you have not given up the challenge to the validity of the notice, including the aspect related to the service of the notice. So, possible response, submit all the available legal grounds that we have just discussed. This will also ensure that the department has to, the adjudicating officer has to give the findings on all the specific grounds that you are indicating. If there are no findings coming, then certainly those orders are completely vitiated, completely non-speaking, completely without reason, and therefore then those orders becomes ground for further challenge, including exercise of the remedy available under the constitutional scheme, where under Article 226, a proceeding undertaken completely without passing a speaking order, proceeding undertaken without application of mind, proceeding undertaken without addressing the challenge to limitation which is put forward by the taxpayer, are proceedings which can be challenged directly before the Honorable High Court. Alternate remedy would not be a bar, and therefore, to that extent, one can then consider the response that one may intend to take. Now, as far as time for filing the response is concerned, 75(6) is clearly saying that at least 3 adjournments are to be given to the taxpayer. We have enough jurisprudence to say that telephonic conversations is not personal hearing. Proper hearing notice is required to be given. Giving 3 dates and saying that you come on either one of the 3 dates is not 3 opportunities, or it is only a single opportunity. And therefore, if you don't go on that particular date, then it would not imply that 3 opportunities have been given, and therefore the department is right in passing the orders ex parte. So these are again aspects that you must keep in mind and respond. If you are not filing a response within the given 30-day window, then you should certainly file a response seeking additional time, indicating the grounds and indicating that by law also you are given the right to seek at least 3 adjournments, and therefore you are seeking the adjournment, and therefore the officer should ideally grant you that extended time. Of course, the officers would not grant you unlimited time, because as we have seen, 31st December is the time limit for them to also issue the order. So certainly they would be expecting you to file the response at the earliest, so that they can also ultimately give their thoughts on the response and ultimately pass an order. Now let us look at the point-wise response. Now, first, on output tax, there is only a single point which is indicated in the notice. They are picking up the figure of the liability based on annual return. So in annual return, if you see, there is table 4, where you declare the tax which is payable on the taxable supplies which you have made during this particular time period from July 17 to March 18. Then the notice considers the additions or subtractions that you have indicated by way of amendments in table number 10 and 11 of the annual return. The notice surprisingly adds the tax on deemed supplies on unreturned goods and pending demands under 16 and 15 table. In fact, these tables are not, in fact, no one would have filled these tables. And in fact, the law had also given an exception which continues till date, where this table 15 and 16 is not to be filled. So I don't see how these figures have also been indicated and considered as a base for the purpose of computing the liability. But in any case, this is what the system feels is something which the taxpayer should have discharged. So that is how it aggregates all these figures. After adjusting the negative amendments that you might have declared in table 11, arrives at the liability, compares that liability with the tax paid and declared in table number 9 of annual return, compares the liability paid by utilizing the ITC again indicated at table 9, compares the tax paid indicated on the incremental liability offered after the end of the year and declared in table number 14, adds the tax liability of previous year. In this situation, it will be nil for everyone, because this is the first year and therefore there is no point of bringing the earlier year adjustment. But certainly we will see figures coming here when such notices, if they are issued for 18, 19 and 19, 20. And that is how it arrives at net tax payable. And that is how it says that this is what you need to pay. Now, there are serious gaps here, because as we already discussed, this is the first year. Annual return, in fact, most of the trade could not understand. In fact, even we could not understand how annual return is to be filed. Government kept on changing the requirement as to what is to be indicated in those returns. Even there was no separate column or table given to declare the liabilities which are paid subsequently or adjustments made in 3B which are filed subsequent to the due dates indicated in table number 14. So there are many gaps in the annual return which have been filed, and therefore it does not capture all the payment details. Nevertheless, so what can be the possible response? You should give wherever evidence is available. Wherever you have paid the liability, you should indicate with evidence. And whenever you find that this has happened, this liability has been calculated based on erroneous reporting in annual return, maybe erroneously someone might have filled up table 4 or maybe table 9 or 10 where amendments are to be declared, or maybe table 14, and that is the reason why the erroneous reporting has happened, and that is why, in absence of any opportunity to revise the annual return, this has happened. Then certainly those facts are to be brought on record with the prayer to say that there is actually no short payment of tax. So that is how ideally one should basically file the response against this particular aspect. Coming to ITC, the first way they try to determine the ineligible ITC is by comparing table 8A. As we discussed, table 8A is based on the figures available in table 2A at the relevant point in time. When you look at table 2A, For this particular year, whatever figures that were available in table 2A as on 31st May 2019 were only auto drafted in 8A. So 8A does not have updated figure. It's quite possible that 2A might have undergone a change after 19th May 2019. And today the 2A of 17-18 may look different from what has been considered in table 8A. So that has been ignored. So that you will have to ultimately bring on record. It has failed to consider cases where place of supply has been indicated as other than recipient's state. There are many transactions where the place of supply could be other state and still credit could be eligible. 8A ignores that aspect. 8A ignores the aspect where as on 31st May 2019, GSTR 1 has been filed, but 3B has not been filed by the suppliers by this particular time limit. Again, those figures have been ignored in 8A, but that does not necessarily mean that credits are ineligible. So again, this is the aspect that you will have to ultimately on a case-to-case basis determine and then ultimately call out the facts. Then what the algorithm does, algorithm then takes the figures from 3B. So on one side, it takes figure from 2A, which is concerning the domestic supplies under forward charge. Then it goes and picks the figure from 3B, the credit which you have indicated as eligible under table 4A relate to ISD, relating to imports, relating to reverse charge, relating to brought forward credits, which again it goes back to 9. It makes an adjustment of credit which you have carry forwarded and indicated in table 8C of the GSTR 9, and then it goes to reversals indicated in 3B, and then it comes to the ITC which is available for use, compares it with the ITC indicated in 3B, and that is how it determines the excess ITC. Now again, there are already on 8A, we already discussed the gaps which are evident. In 3B also there are such gaps. At the relevant point in time, nobody had a clear idea how to indicate figures in 3B. So at times it has happened that imports have not gone into imports column. It might have gone as a regular credit. At times it has happened that credit related to tax payable under reverse charge has not gone under 4A column 3. It might have gone as a regular credit. It is quite possible that the carry forward amount of credit indicated in table 8C might be such credit which might have been availed in this year, but in the books it might have been indicated in the next year. So all of these are basically the flaws coming from 3B filing. Reversals, again, 3B has a column indicating certain reversals, but not necessarily that these are the only reversals which the taxpayer might have done concerning this particular year. As you are aware, Circular 26 permitted taxpayers to basically undertake reversals even in the 3B which are filed for subsequent tax periods, even after March 2018 related to 17-18. So again, you will have to again do a reconciliation of 3B where a taxpayer has gone wrong in filing 3B, and then come out with a clean reconciliation, and then see whether there is any excess amount of credit. So that is the first step which one has to undertake. Something which to my mind is completely useless, but still because now we are facing this reality where this is what ultimately the department is seeking. We are now expected to do this exercise. In fact, I would have wished that had this approach being indicated when persons were filing annual returns, that this is how they intend to compare. And this comparison which now they are making, if this would have formed part of annual return itself, lot of suffering, lot of pains which now taxpayers will have to undertake could have been avoided. So in any case, this is where we are. So now if you still arrive at an adverse difference, does it mean ITC is ineligible? The answer would be no. Look at Circular 183. It says even if something is not in 2A, still credit would be available if the recipient is able to furnish a certificate indicating that the tax has been paid. The certificate could be of supplier where the difference is less than 5 lakh vis-a-vis that supplier, or it could be a certificate issued by a chartered accountant where the difference is exceeding 5 lakhs. So it is not the case where the difference is immediately to be paid back to the government. Second, can my credit be denied merely based on 2A? Jurisprudence is now developing. We have now decisions coming from various high courts. For reference, I have referred one decision of Kerala High Court in the case of DIA agencies, where the courts are taking a view that mere 2A can never be the ground to deny the credit to the assessee. The assessing authority, the adjudicating authority will have to ultimately see the basis for taking the credit. Consider section 16(2). If the taxpayer is having the invoice, if the taxpayer is able to demonstrate that it has received the supplies, if the taxpayer is able to demonstrate that he has paid the taxes to the supplier, including the GST and the basic amount, then in that situation, the taxpayer has discharged the burden, which is required to discharge under section 155 of the CGST Act. And therefore, courts are saying that in such situation, once a burden has been discharged by the recipient, in that situation, recovery cannot happen straight away from the recipient. Recovery cannot happen from the recipient. Recovery, if at all, has to happen only from the concerned supplier, who might have incorrectly filed the returns or who might not have paid the tax. So that is the jurisprudence which is now developing. So these are again the grounds that you will have to take if ultimately after the reconciliation you still come with a adverse difference. Ironically, if you look at 8A, it contains even ineligible credits as part of 2A, whereas in 3B one would have only considered eligible credits. So again, something which again is shocking, that this has not been considered as a part of reconciliation exercise while issuing such kinds of system-based notices. But so this is the aspect that you must consider. File correct reconciliation, give certificates wherever available, certificates already ITC paid, later on give the details. Ultimately, if you still are left with adverse ITC, then you give legal grounds with evidence to say that merely based on 2A, the ITC cannot be recovered. Another aspect, let us look at 17(1) and 17(2). Now the notice assumes the entire ITC that you have availed during this 9-month period is common ITC. So let us say you have made certain exempt supplies. Let us say you have made supplies in terms of you might have sold MEIS licenses which were exempted from GST. In that, and let us say you have indicated those supplies here. And let us say the quantum is 1% of total supplies. What the notice presumes? Notice presumes that if you have availed, let us say 10 crore of ITC, then the notice presumes 1% of the 10 crore is ineligible, 10 lakhs, and therefore the notice says you should have paid 10 lakhs. It compares that with the amount which has already been reversed and indicated in either the annual return or 3B. And if the notice finds that the amount indicated in 3B is not covering this figure of 10 lakh, then the notice assumes that the differential amount is liable to be recovered. Again, completely baseless. 17(2) read with rule 42-43 never works in this manner. In fact, if you see those provisions, it says that the entire ITC is first to be bifurcated into 3 categories. ITC completely attributable to taxable supply is fully eligible. ITC attributable to exempt supply is fully ineligible. And then what you are left with is a common ITC where you apply this ratio of 1% to ultimately arrive at the figure of ITC which is required to be reversed. As we saw, instructions in a way addresses this issue where it says that if the officer finds exempt inward supplies, then officer is directed to drop the matter. If that happens, well enough. If that doesn't happen, then in that situation, you will have to ultimately furnish a calculation based on rule 42 and 43 and arrive at the actual ITC, if at all, which is liable to be reversed or liable to be paid back. Someone can also consider challenge to this notice on that aspect, because at the relevant point in time, the rule 42 and 43 provided a mechanism to undertake the reversal via GSTR 2. As you are aware, GSTR 2 was not operational. An amendment saying that reversal under rule 42-43 has to happen via GSTR 3B only came from last year. So it is a prospective amendment. It is not a retrospective amendment, and therefore, for the year concerned, certainly a mechanism was lacking for the purpose of making the reversals which are envisaged under Rule 42 and 43, and therefore that can be a serious ground to contest the demand. There are other grounds also available where, let us say, someone would have done the reversal on some alternate base, not on the basis of turnover. Take a case of hospitals where there is a pharma store. There is a clear indication of the purchase of medicines which are going into use for treating inpatients. There are clear records available for the sales made to outpatients. Sales made to outpatients attract GST. The medicines used for treating the inpatients is part of healthcare service composite supply. It is exempt from GST. And therefore, this entity makes a claim of credit based on actual quantum of medicines which have actually been sold, which attract GST. Now, this calculation is not part of Rule 42-43 mechanism. This is something which under 17(2) is legally a right of the taxpayer of determining such ITC attributable to exempt supply based on this scientific base. So again, something which has not been considered by the notice, and again, therefore, you will have to ultimately give this as a ground to ultimately defend your claim if you have undertaken the reversal, or if you have not availed the credit at all based on this kind of workings. So again, this is a response that one must consider to this issue. Ineligible ITC under section 17(5). Now again, as we discussed, 17(5), none of the provisions of 17(5) are absolute in nature. All the restrictions under 17(5) has specific exceptions. The notice completely ignores that aspect of law. It merely goes by HSN and says that if there is motor vehicle not eligible, insurance of motor vehicle not eligible, airline travel. It is very funny to consider how airline travel is not eligible. Perhaps they are presuming that instead of director, it is the wife of the director or the wife of the partner who is perhaps going on a leisure tour, and the invoice is getting booked in the firm or in the company and credit is availed, and therefore they find that it is not eligible. Now that kind of assumption, something which certainly one cannot make without examining the data, and such en masse assumption across 20-30,000 assesses across the state is something unheard of. But however, this is the basis on which they have worked. Electrical goods, it is shocking to say that how credit of electrical goods becomes ineligible under section 17(5). Electrical goods are not building. Electrical goods are by itself an asset, a separate asset. Purchase of electrical goods for the purpose of business, certainly credit is not restricted. None of the provisions of 17(5) restrict such credit. And therefore, again, something shocking to see how this becomes an ineligible credit. Plywood, again, plywood used for making furniture, credit is duly admissible. Again, here maybe the thought process is that someone makes a furniture for his home and maybe takes an invoice in the business entity and therefore tries to avail the credit. Again, something which you cannot make en masse, something you cannot allege across all the entire taxpayer base. Hardware, again the same illogical thinking which is evident from the way the list has been drafted. Here again, please look at the provision of law. Motor vehicle insurance was not restricted till 1st February 2019. An amendment only came on or after 1st February 19, saying that the ITC in respect of expenditure related to vehicle is inadmissible if the vehicle per se is not eligible under 17(5) clause A. So for 17-18, the restrictions were not in place as far as expenses related to vehicles are concerned, including repairs, maintenance, etc. So all of this you will have to, and this list would certainly include cases where a person might not have availed the credit. Motor vehicle, for example, there can be situations where largely the person's taxpayers were aware of this provision and might not have availed the credit. Again, something which the notice completely ignores and alleges that they intend to recover this notice, because this list, the summation of this is then compared with the ITC declared as ineligible. So not actually taken, something declared as ineligible in the annual return or in table 3B. If they find that you have not declared this as ineligible, then they presume that this entire ITC is liable for recovery. Something totally against their own circular. In fact, only in August 2022, they came with a circular mandating that you will have to start declaring the ineligible ITC in 3B. Prior to August 2022, there was no circular issued by the board mandating that an ineligible ITC is required to be declared in the returns that are filed by the taxpayer. So if something which was not mandated can become a base for making a serious allegation of wrongful availment of credit. Again, something which, again, I would request if state government is listening, should consider at least for 18, 19, 19, 20 before proceeding on such a completely wrong and baseless footing. So here again, the taxpayer will have to ultimately respond by indicating with evidence that my supply are not covered within 17.5, indicating the actual use of the inward supply in question, and ultimately justifying the claim of credit. If someone has actually taken wrong credit and already discharged, then the evidence of that is required to be submitted. For all other cases, one will have to ultimately give the factual as well as the legal grounds to say that credit is, I hope, in fact, I was hoping that the instructions come saying that at least ITC related to electrical goods, hardware, like plywood items, hardware items, at least for those cases, the instructions could have been issued to say that those matters would be dropped. No further evidence or no further submission is expected from the taxpayer. But as we saw, the instructions which have come today have not dealt with this particular aspect. A cancelled dealer. Now, this is the last aspect that is forming part of the notices under discussion. So these are the cases where the department is alleging that 16(2)(c) is violated, and therefore they are saying that ITC availed from given 3 set of suppliers is not eligible. As we already indicated, the third category, supplier filing 3B with nil turnover, this basically has all transporters, where in any case the tax, if paid under reverse charge, cannot form part of this table, cannot be a case where credit is not eligible. So something may be completely ignored at the time of setting up this software. As far as first 2 categories are concerned, supplier registration cancelled before date of invoice and supplier failing to file GSTR 3B and not paying the tax on the invoices declaring GSTR 1. Again, you look at a situation under serial number 2. There is a supplier who has declared liability of 10 crore. He has not filed. He has declared 3B and he has paid 9.5 crore. Maybe 50 lakhs, he has some justification. Maybe on advance, he would have declared earlier. Whatever may have been the case. The algorithm software presumes that since they have not paid fully the tax declared in their one, the entire 10 crore of ITC is not available to their respective recipients, and therefore tries to say that this is ineligible ITC. Again, something which is completely not in accordance with the law. See, again, I am saying we are not having any grievance against the issues indicated in this notice, but this cannot become a base for a show cause notice. This could have well been a good base for starting an inquiry of scrutiny of returns. This could have been a good base for initiating audits against the taxpayer, but at the very fang end of limitation, because there is lack of time, this cannot become as a shortcut to make a serious allegation against the taxpayer. This goes fundamentally against the provisions of law. As far as first category is concerned, where the supplier's registrations have been cancelled, it is possible that cancellation has happened subsequent to the date of issuance of invoice to you. But cancellation, since it has happened with a retrospective effect, those suppliers are also ultimately tagged and considered here as part of this table for the purpose of making an allegation of wrong availment of credit. Here, again, one has to respond. There are enough jurisprudence available to say that whatever burden of proof that the law expects a taxpayer to render, if the taxpayer is able to demonstrate through evidence that that burden has been discharged, then merely on non-payment of the supplier or a fraud committed by the supplier, the credit of the recipient cannot be disputed. So one has to refer to 155 and say there is a burden casted on the recipient. Burden is not unlimited, burden is as per law. Then one has to refer to 16.2 to indicate what all evidence the taxpayer is supposed to submit. Taxpayer is, when filing a response, kindly make that submission, kindly submit all the copies of invoices where the supplier's registrations have been cancelled, submit the ledger copies indicating the fact of payment, submit the proof of actual receipt of material, usage of that material, maybe trading activity, then you can indicate one-to-one correlation of inward supply with outward supply. If you're used in manufacturing activity, please indicate with records the consumption of that material and ultimately further sale of the finished goods manufactured out of that material. All of that ultimately will help you to discharge the burden under 155. Once a burden is ultimately discharged under 155, then you can then go and make a submission to say that in that situation, on account of alleged fraud committed by the supplier, the credit could not be disputed. So these are all the provisions that you can find on the screen, which you will have to make a reference while submitting the reply. You ask for cross-examination of the supplier because ultimately you have that right to ultimately call out the fact that whether you are party to that fraud or you are the innocent buyer who has made a purchase, bona fide purchase, and the fraud, whatever it is, has been committed only at the end of the supply. Also ask as a part of rely upon document that ask for the copy of the registration certificate issued by the supplier, because it is the department who has issued the registration to the suppliers. It is a department who are given the onus to make the verification of the records while issuing the certificate of registration. If you see section 25 read with rule 9, it specifically mandates the officer to undertake those verifications. So if on the basis of the documents given by the alleged fraudulent suppliers, if the department has given the registrations, and if basis the same document, now the department is cancelling those registrations, saying that those records are fake, then in that situation, certainly how as a recipient you can be ultimately questioned and credit be recovered on the lapse at the end of the authority issuing the registration to such suppliers. So again, something which one must indicate. One must also ask for all the documents related to the proceedings initiated by the department against that supplier, because the law is now settling to say that unless the department first initiates the proceeding against the supplier and finds out actually the facts of the case, straight away department cannot allege against the recipient that the credit in question is not eligible. Even the recovery proceedings are very clear. Recovery has to be initiated first against the concerned supplier who has received the tax from the recipient in question. So reference can also be made to this CBIC circular 171, which deals with fake invoices. So these are basically the decisions that one can refer where the courts are saying that merely on non-payment by the supplier, credit cannot be denied to the taxpayer in a genuine transaction. Once the burden of proof is discharged by the recipient, then the recovery has to happen from the supplier. The evidence indicated by the recipient saying that the supplies in question are genuine cannot be disputed unless there is a cogent evidence contrary available with the department. If the supplier allegedly commits the fraud in terms of supplier availing ineligible credit or a credit on fake invoice, it would not transpire that the supply made to you is also ultimately fake, or the tax charged and collected from you is also not eligible for credit. You have a right of cross-examination. If any retraction has been filed, then ultimately also that aids the case to say that credit is otherwise eligible. You have to also ask for all the documents on the basis of which the serious allegation has been framed against you by saying that the transactions are not genuine. 16(2)(c) is breached. You should also indicate that the notices are vague because they are merely relying on the cancellation order. Now, if you see the cancellation order, if you get a copy of that order, and you have a right to get that copy, you will find how much reasoning has been indicated in those cancellation orders at the time of cancelling the registration of the given supplier. whether there is cogent material indicated in that cancellation order to say that and to establish that really there was a fraud committed by the supplier and you are also party to that fraud. In absence of any such reasoning available in the cancellation orders, how straight away the credit can be held to be ineligible at the end of the recipient. You also indicate the recovery has to happen from the supplier first. You also indicate that order cannot travel beyond the SCN. SCN is merely relying on the cancellation date of registration certificate. SCN is not indicating any other contention or giving any other evidence to say that the inward supplies in question are not genuine, and therefore now during adjudication the limited issue to decide is whether merely on the fact of cancellation of registration can the ITC be denied to the recipient. You also ask for a speaking order. We already saw under section 75 there is a mandate to pass a speaking order on all the contentions that you are taking. On the issue of jurisdiction, we already seen. On the issue of penalty, if at all there is a fraud committed by the supplier, if you are not a party to that fraud, then certainly it cannot be said that you have availed the credit with the intent of evading the tax, and therefore the question of imposing penalty in such situation should not arise. So these are again the grounds that you must take in a situation where you find that in your case the ITC is sought to be recovered from suppliers whose registrations have been cancelled. So way forward, study the notice. As I had indicated on Saturday, where I had addressed one physical seminar on such issue, there cannot be a common standard reply. Please understand this, that every case is different, every facts are different. There cannot be a stereotypical reply where you can copy and paste and give it for all the assesses in question. Legal grounds we already saw, but can have a reply which you can then ultimately also refer in similar cases. But factual grounds, there cannot be a common reply. You will have to ultimately ask the client, the accountant of the client, to study the facts, come out with the clean reconciliation, study the reconciliation, and then decide what all available grounds that you can take. What we have discussed today in this seminar is the tools which are available in drafting the response. Which tool to use depends on the circumstances that you find yourself in. This is that you will have to decide which tools you need to ultimately use while drafting the response. As I had also indicated that what we discussed is, you can say, is like a cloth which is now available with you. Ultimately, you will have to stitch the suit. Now, stitching of the suit requires a proper measurement of the person for whom you are making the suit. So therefore, every notice has to be ultimately dealt with on respective merits. Exercise the right of personal hearing, then examine the order. We hope whatever urgency that has happened and whatever now the situation we are sitting in, at least that is not again repeated. I am hoping that on 11th January, we are not again having such session where we deal with such mechanical orders which are ultimately showered on the taxpayers. It is a hope that proper application of mind happens, and certainly this is avoided. If this continues, then certainly one has to seriously consider exercising the writ remedy which is available under the Constitution. So with that, I end. I thank again both the associations, the Income Tax Bar Association, the AGFTC, for allowing me, inviting me to share some of my thoughts on this topic. So if now we have any questions, I would be happy to take it.
So members, participants can ask question in chat box or raise the hand so that we can give chance to them to talk or asking the question. Yes, chat box is open for everyone and you can raise hand also.
Wait. I have one question. If just with regard to the one letter just in afternoon issued by the department, એમાં એમને એવું લખ્યું છે જેઓના કેસમાં રિટર્ન સ્ક્રુટિનીની કામગીરી થયેલ છે તેવા કિસ્સામાં ફરીથી આઈઆઈટી બિગ ડેટા દ્વારા આપવામાં આવેલ નોટિસનો સમાન મુદ્દા હોય તેવા કિસ્સામાં તે મુદ્દા પૂરતી નોટિસ ડ્રોપ કરવાની રહેશે. હવે અહીંયા ખાલી મારો પ્રશ્ન એવો છે કે સ્ક્રુટિની કામગીરી થઈ હોય એટલે એએસએમટી 10, 11, 12 પતી ગયું હોય એવું જરૂરી છે કે એએસએમટી 10 ઇસ્યુ થઈ હોય 11 માં રિપ્લાય કર્યો હોય અને પેન્ડિંગ હોય?
મારી અંડરસ્ટેન્ડિંગ એ છે કે અગર એએસએમટી 10 ઇસ્યુ થઈ ચૂક્યું છે આ પર્ટિક્યુલર ઇસ્યુ ઉપર કે જેમાં એ લોકો કાં તો 2A સાથે આઈટીસી કમ્પેર કરીને તમને કહે છે કે આની ડિસ્ક્રિપન્સી પર તમે જવાબ આપો કે આઉટપુટ ટેક્સમાં ગેપ છે એના વિશે તમને જણાવે છે, તો ભલે એએસએમટી 12 ઇસ્યુ ના થયું, મારા હિસાબે હવે એ જ્યુરિસ્ડિક્શનમાં એ પ્રોસિડિંગ છે. એ જ્યુરિસ્ડિક્શન હેઠળ જે બી ફાઇનલી સેક્શન 61 હેઠળ આઉટકમ આવશે અને ફર્ધર 73, 74 હેઠળ અગર લિમિટેશન પીરિયડમાં રહેશે તો એ ડિપાર્ટમેન્ટ એની કાર્યવાહી સેપરેટલી કરશે. એટલે એ મુદ્દો આ મેટર માટે આ પર્ટિક્યુલર નોટિસ માટે ટોટલી મારા હિસાબે એક્સક્લુડ થઈ જશે. આ નોટિસ માં એ મુદ્દાનો એજ્યુડિકેશન નહીં થાય.
ઓકે ઓકે,
ધેટ ઇઝ માય અન્ડરસ્ટેન્ડિંગ. બટ અગેન
યસ યસ,
આપણે જાણીએ છીએ ડિપાર્ટમેન્ટ કઈ રીતે કામ કરે છે અને કઈ રીતે સમજે છે, એટલે ઓનલી ટાઈમ વિલ ટેલ વેધર ધીસ અલ્ટિમેટલી this
Yes,
broader
yes.
view would be accepted or not.
Sir, there are few questions in the chat box. There might be questions which is already covered in your session, but I am reading it. There is a question from Hetal Shah. What if ITC claimed under CGST and SGST instead of IGST in the year 17-18 in GSTR 3B? Inter had changed. What would be remedy to come out against DRC 01 notice issued?
See, this is again an issue. I agree, and as we discussed, this particular notice only covers CGST, SGST. They have in fact not touched upon IGST, where one could have even indicated that ultimately at a net level the gap is not that much as what is appearing in this notice. See, when you look at section 16(1) of the CGST Act, it does not say that under the CGST Act you should avail only credit of CGST. It says any input tax credit can be availed. And when you look at the language of input tax, it covers CGST, SGST, and IGST. So a legal contention can certainly be raised that the law does not anyway restrict or mandates that only headwise credits are to be claimed. 16(1) permits me to claim the credit of all the three taxes under the single ledger, that is the CGST ledger maintained under the CGST Act. Therefore, to that extent, one cannot say that it is wrongly availed. So to my mind, certainly one should contest, and if one has made the rectification subsequently, that fact can be indicated, saying that as per circular 26, which has in any case no limitation within which such rectifications can happen. So if someone has even subsequently rectified it, then that very well, that fact itself will again demonstrate that now no further recovery is required to be undertaken.
Sir, there is another question from Chintan Parikh. Shall we challenge validity of notice and giving point-wise reply simultaneously, or challan validity only? Challenge validity only.
See, now time is short. So basically, see, certainly one can consider challenging the validity of the notice, but it all depends on the discretion of the bench, whether at this stage, whether they would like to, because at this stage it is an allegation. Although rightly or wrongly, we already discussed, to my mind, it is completely wrong. But ultimately, it is the discretion of the court. So one can consider doing both the things, because ultimately, if let us say by a reasonable time, if there is no stay granted by the court against the notice, then the department will go ahead and pass an order, and ultimately you will have to amend the petition and challenge the order. So better strategy could be that if one intends to challenge, certainly one will be well within the rights to challenge the notice. On merits, one can also simultaneously file a response saying that alternately, this is what department can consider if at all they intend to pass an adverse order, and then ask the court to ultimately grant an interim relief. If the court grants a relief and ultimately decides the larger issue of validity per se on all the points that we have discussed, certainly one can consider. In fact, even association can consider taking such a response. We have seen in cases like recently we had this issue of entire GIDC plots where the association has filed a petition. We have seen even situations where under Rule 9610, in case of refunds also, many chemical associations have gone to the courts and they have challenged the validity of the notices issued pursuant to those provisions. So certainly, and this is a larger issue affecting all industry. So a taxpayer will be well within the rights to challenge, and certainly, to my mind, even association would be also well within the rights to challenge for the benefit of the members. Industrial association.
Yes. Sir, there is another question from Hardik Mehta. Should we wait for case drop as per today's advisory or file reply?
See,
There is
again,
an ancillary question, sir. I will ask, if the dean is not found on CBIC side, whether it can be contested notice validity.
see, I will answer the second easier question. Dean applies only to central notices. This is a state notice. So in any case, you will not find this dean. Nobody will ever find this dean on CBIC portal. So anyway, that would not be the ground to challenge this notice. First question is very interesting because these instructions on the face of it looks pleasing, but then we are ultimately running against time. And there is no time bound way in which the instructions are indicating that by, let us say, end of this month, they will indicate which are the notices which are still surviving. And therefore, they expect the taxpayer to respond within, again, a reasonable time. So I would again request that through association, if additionally we can bring this point forward to say that at least now, based on this instruction, kindly ask the officers to ultimately scrutinize all the notices and ultimately finalize the notices which are still going to survive basis this instruction, and then again inform the concerned taxpayers and then take it up. That would at least give relief to those taxpayers who are clearly covered by the exceptions which are indicated today.
Sir, but for that, you have to be falling entirely under the advisory. If your one point is out of advisory, then better to file a reply, right?
So to the extent you are covered by the advisory, even on a point, to my mind, there is no need to do the exercise straight away. For other points, certainly you must file.
Sir, Jitendra Soni, I have asked you to unmute. You can ask the question.
અભયભાઈ
હાજી.
હા અભયભાઈ હવે એ લોકોએ 280B ના ડિફરન્સ ઉપર જ ટેક્સની ડિમાન્ડ કરી છે વિધાઉટ એની વેરિફિકેશન ઓર વિધાઉટ એની ઇન્ક્વાયરી. So can we demand from them underlying details of transaction they have alleged on which મતલબ કે આપણે ITC ક્લેમ કરી છે એવા ટ્રાન્ઝેક્શનની ડિટેલ્સ આપણે એમની પાસે માંગી શકીએ ખરા કે ભાઈ 155 એની અંદર વચ્ચે આવે?
સી એમણે જે રીતે કર્યું છે, મેં જેમ સમજાયું કે એ લોકોએ જે 17-18 માટે જે મે મહિનામાં મે 31 મે 19 જે 2A સિસ્ટમમાં અવેલેબલ હતું, જેના હિસાબે 8A બન્યું છે, 8Aની વિગત તમે મેળવી શકો છો. આજે જેના બેઝ ઉપર 8A એન્યુઅલ રિટર્નમાં ઓટો પોપ્યુલેટ થયું છે, એ ફિગર લઈને બાકીના વર્કિંગ એમણે એમણે તો આપણે ના કહી શકીએ, એલ્ગોરિધમે કર્યા છે. એટલે ડેટા છે, સાચો ખોટો ડેટા અવેલેબલ છે. એટલે આજે આપણે અગર સાબિત કરવું છે કે આ ક્રેડિટ આપણી સાચી છે, તો આપણે આપણી રીતે મેં જેમ કીધું એમ રિકન્સિલેશન બનાવીને આપવું પડે. આપણે એવું સમજતા હોઈએ અને આપણી મારા હિસાબે સાચી સમજ બી છે કે આપણે આજનું 2A લઈને જઈશું અને એના બેઝિસ પર રિકન્સિલેશન બનાવીશું, તો એ મારા હિસાબે એ લઈ શકાય સ્ટેન્ડ કે જેના બેઝ ઉપર આપણે પછી શો કરી શકીએ કે જે બી હવે જે ગેપ છે એમાં કાં તો તમે સર્ટિફિકેટ મેળવ્યા છે, કાં તો ભાઈ તમારે હવે આ જે લીગલ જે આપણે વાત કરી કન્ટેન્શન એ તમારે લેવા છે એઝ ફાર એઝ જે 2A માં શો નથી. અને મેં જેમ કીધું એમ 2A માં ઇનએલિજિબલ ક્રેડિટ બી દેખાવાનું, ફક્ત એલિજિબલ નથી દેખાવાનું. જ્યારે 3B માં જે કમ્પેરિઝન થઈ રહી છે ફક્ત એલિજિબલ સાથે થઈ રહી છે. ઘણી વાર એવું બનશે કે તમારી ઇનએલિજિબલ ક્રેડિટ જે ગ્રોસ અમાઉન્ટમાં છે અને એની સામે એલિજિબલ ક્રેડિટ જે 2A માં નથી શો થતી એ ઓવરરાઈડ થઈ જશે. એટલે નેટ ડિફરન્સ તમારો ટુ ધેટ એક્સટેન્ટ ઓછો આવશે. અને જેમ આપણે કાયદો જોયો, જે શોકોઝ નોટિસમાં રકમ લખેલી હોય એનાથી વધુ રકમનો ઓર્ડર ના પાસ કરી શકે. હવે એમની જે નેટ ડિફરન્સ દાખલા તરીકે એમનો 10 લાખ આવે છે અને હવે તમે ટ્રાન્ઝેક્શન વાઇઝ કરીને 12 લાખનો હિસાબ આપો છો કે 12 લાખ નથી શો થતા, ડિસ્પ્યુટ તો 10 લાખ સુધીનો જ રહેવાનો છે, 12 લાખ નહીં થાય. અને હવે
Right.
એ તમારે એના વિશે તમારે આ જે લીગલ ગ્રાઉન્ડ આપણે ચર્ચા કરી એ તમારે એના વિશે આપવાનું છે.
Okay.
Sir, there is another raise hand. Pratik Mishrani. Pratik, you can ask question.
Hello, good evening, sir.
ગુડ ઇવનિંગ, ગુડ ઇવનિંગ. બોલો બોલો.
Sir, as far as the notices which I've came across, I've received, in all the cases, we have received 2 PDFs. One is dot notice in which we have got DRC1. Another is attachment to show cause notice, which is about of 2 pages.
Right.
So, sir, as per section 73(1) read with rule 142(1)(a), there is no show cause notice with us, which is compulsory to issue. So, can we add that point in our discussion? In our reply to make that notice bad in law.
See, મને લાગે જુનાગઢ માટે સ્પેશિયલ ટ્રીટમેન્ટ છે. બેઝિકલી જે આપણે જોયું ને એ શોકોઝ નોટિસ બી છે, જે એટેચમેન્ટ આપણે જોયું એ બેઝિકલી
Okay.
શોકોઝ નોટિસ જ છે. અને DRC01 છે, ઇટ્સ અ સમરી ઓફ ધ શોકોઝ નોટિસ. સો પર સે ઇટ ઇઝ કમ્પ્લાઇંગ વિથ 73(1) read with rule 142(1). આપ જે 1A ની વાત કરો છો ને, that is a pre શોકોઝ નોટિસ.
Yeah.
જે DRC1A ની વાત કરો છો, રૂલ 142(1)A માં છે.
Okay.
એમાં બેઝિકલી પહેલા it was mandatory for the department to issue a pre-SCN before issuing the SCN. Then they have amended the law in 2020, where now they have made it discretionary for the department. So now high courts are saying that now, since it is discretionary, it is not mandatory for the department to first issue DRC1A and then issue DRC1. So that is why purposefully that I have not taken as a ground to challenge that, because already courts are now leaning towards a view where they are saying that since it is discretionary, non-issuance of 1A cannot lead to invalidity of the notice.
No issues with it, sir. But I would like to say that the second that which we are telling કે જેને આપણે શોકોઝ નોટિસ કન્સિડર કરીએ છીએ, એની ઉપર એ લોકો હેડ જે લખે છે, that એ હેડ છે attachment to શોકોઝ નોટિસ.
આ હેડ ખોટું છે.
આની જોડે એક શોકોઝ નોટિસ હોવી જોઈએ એમ. પેલાને લખે છે સમરી ઓફ શોકોઝ નોટિસ, આને લખે છે attachment to શોકોઝ નોટિસ, તો વેરી શોકોઝ નોટિસ એમ.
એટલે એમની પાસે તો આ જ છે જે એમને કેવું છે તમને. Beyond એમની પાસે કઈ છે બી નહીં કે તમને આપી શકે. એટલે બેઝિકલી attachment to શોકોઝ નોટિસ બેઝિકલી એમનો ઇન્ટેન્ટ એ છે કે it is an attachment to DRC0.
Okay.
એ રીતે that is how basically they are reading it. So અને આમાં બધા એલિગેશન છે એમના એન્ડે જે એમણે ફોર્મ કર્યા છે based on this data analysis that are already there as part of this attachment.
Okay, thank you very much, sir.
Sir, as we have already exceeded time, if time permits, how many questions can we take? 2 or 3 or something?
Maybe 2-3 questions.
Yes. So last 3 questions we are taking, sir. There is a question in chat box. Department has issued notice for reversal of ITC as per rule 42. We have shown high C sales in exempted sale because in 2017-18 it was not covered in schedule 3. CBI has amended schedule 3 in 2019, but it has not clarified whether it is retrospective or not. So do we need to reverse common ITC based on rule 42?
No, so basically earlier this was an issue, but last year even section 17(3) has been amended with a retrospective effect from 1st July 17, where they are saying that transactions covered under schedule 3, barring the transactions related to sale of land and completed building, the provisions of reversal would not get attracted. So now the problem is solved. So to my mind, there is no reversal required for even 17-18 on account of high C sales.
Okay, sir. There is a technical question that do we have to file the reply online? So looking at the
Yes,
State
yes.
Department, how it works.
No. So basically, if you see the procedure under rule 142, they are expecting a reply in DRC06 online. So certainly if the reply, if the documents that you intend to give are not ultimately you are not able to upload, then those documents you can submit offline. But main reply should go online to basically comply with law.
There is a question. We have filed 3B return after the due date of 16/4. On 31st March 2019. We have availed the benefit of amnesty scheme issued by CBIC. But now department is denying the ITC on the basis that time limit to avail ITC under section 16(4) is lapsed.
Right. See, basically, this is again, this is actually not relevant for today's discussion, because today's notices are not basically trying to recover on the issue of limitation. But however, see, recently 2 high courts have ultimately declared that 16(4) is valid. In fact, in one of the cases before the High Court, it was exactly this factual situation where a registration was ultimately cancelled on account of non-filing of the returns, and when it was restored, and then subsequently when the returns were filed, the time limit for availing the credit had already expired. And in those set of facts, the High Court has come out with a ruling saying that since ITC is a statutory right and one has to exercise the right within the permissible limitations of law, and therefore the High Court has not given relief in terms of reading down 16(4). So one has to see how our jurisdictional High Court or Supreme Court takes a final view. But currently 2 views are against the taxpayer.
Okay. So we are taking this last question, sir. Prakash Choradia, I am asking you to unmute. You can ask the question.
Good evening, sir.
Good evening.
Yes, please ask your question.
I have received one advisory for 1718 in physical mode, and then the same issue is covered in DRC 01 also from the different STU. So we have to close the matter at both the STU, or what we have to do? The same issue.
Right. No, sir, as we saw in the instructions, what they are indicating that since you already received an advisory, then
Yeah.
the office who has issued the advisory will now be pursuing the matter as per the
Yeah.
provisions of law. The current notice, which has the same issue, that to the extent of that issue, the notice would be dropped. So
Automatically, or we have to get something against the advisory from
they
the...
are so they are indicating in the instructions that it is the officer who will do the homework. See, based on the available records with them, that on the matter indicated in the notice, whether any advisory has also been issued to that particular taxpayer, and basis that the instructions are indicating that you should drop and inform that only to the taxpayer that the issue is dropped. But that is what the instructions indicate.
Yeah.
My suggestion would be that you should not wait for the officers to ultimately do this work, because you don't know whether they will ultimately be doing it in time or not. So if you have already data available, and since instructions are already there on record, it is suggested to inform them that already on this issue already proceedings are ongoing by way of this advisory, and refer to these instructions, and then ultimately request them to drop that particular matter. That I think that then you should not have any difficulty.
Okay, thank you. Thank you. Thank you. Thank you.
The situation of GST as of now is such that we cannot end the session till 12 if Abhay can keep giving answer to the issues, because there are so many issues. So rest of the question as of now we are not taking. Over to the presidents of both the association.
પહેલા એવું કહેવાતું હતું કે 2 GST છે, એક પોર્ટલ પર ચાલે છે અને એક જે એક્ટમાં છે, પણ હવે આ લેક્ચર પછી એવું લાગે છે કે એક GST જે નોટિસ આપે છે એ છે, એક પોર્ટલ પર GST છે, એક જે બનાવવા વાળો બનાવવા માંગતો હતો અને એક જે પબ્લિક ફોલો કરે છે. સો દરેક જણ પોતાનું GST નું ઇન્ટરપ્રિટેશન કરે છે એવું મને લાગે છે. એન્ડ અભયભાઈ, વન્ડરફુલ લેક્ચર, થેન્ક યુ સો મચ. રવિભાઈ?
Excellent. And we have once 287 participants. So I hope we reach to all the corners of Gujarat with this webinar. So thank you, sir. And I request Ashish Bhai for
Sridhar bhai, please propose a vote of thanks and also share a moment.
Yes. Sir, thank you very much, Abhay bhai.
Thank you so much.
Sir, in virtual era, please accept this virtual certificate of appreciation, which will also reach to you physically.
Yes, yes. No, now taxpayers are accepting virtual notices, so we have no option but to accept virtual certificates.
Yes, sir.
Yes. It is a matter of pride for me to propose vote of thanks for this webinar. We reached 287. We exceeded the limit of our Zoom license on very first minute. And thereafter, there were so many participants who are on the YouTube. You have seen the live. Also, YouTube will definitely serve as a repository, and people would refer it multiple times to when there is a point to answer the notices. So, sir, thank you for such a wonderful lecture. And as it is your USP that you cover each and every point in very detailed and that too in lucid manner. So we, on behalf of both the association as well as all the participants, I thank you for taking so much time in preparing such a presentation and taking such a lengthy lecture. In addition to that, if I consider the lecture as a cake, then the icing part was the answers to the question which were asked by the participants. And for that also, sir, we are thankful to you on behalf of both the association. We will definitely have your sessions in future too, because we can see the charm of your lecture like Bharat-Pakistan cricket match. So with this word, I'll end this webinar. Thank you. Thank you everyone for joining.
Thank you so much.
Thank you so much.
Thank you.